Steve and Joe from Freshagenda, and Steve, we're here. It's good news.
We're back up on our seats.
We've both had our 7 days isolation from COVID. Finally caught up with us.
And we've still got lingering effects.
We do, yeah. But we're here with a little bit of a
market update.
Yeah. So we've got a fairly packed agenda really today, Steve. We've got a bit of an overview of what's happening in global trade, another GDT event, obviously, and of course, Chart of the Week.
Right, let's cut into it because my voice won't last long and I'm getting impatient. So we've added up global trade. Yesterday we published this to our subscribers. Our summary of May's trade, the most available complete picture of the global environment. Trade is down in May. And you can see there that what we're in a period where there are very strong comparables for total trade, and that's going to become more apparent as we go further, because I think the next couple of months we're going to see negatives as well in terms of total output. Heavy falls in milk powders year on year, because what was occurring last year was that very strong surge in demand from China as it reloaded, as it came out of restrictions and prime demand. So that's now washing through, and we're seeing pretty big negatives, but we're also seeing some pretty strong fat numbers in recent times. Yeah,
on those comparables. But I guess, it's two sides of this, isn't there, really? There's an availability issue for some of these powders, but also certainly we're seeing some pushback some lower demand, which we'll go into.
So regionally, as we see some of the demand pushback, China is obviously the biggest part of this.
It's huge, isn't it?
Right now. So the falls in trade in China in the past 6 months, and then you go back a year, dwarf all the gains in other regions. So trade is negative because of China's lower intake at this time of year compared to last year. They will continue the story as we go. That's where you can see the biggest falls in terms of powders. Whole milk powder is all about China, but there are in some other regions where there's softer demand, as with skim milk powder.
Sure.
But it's dominated by what we keep talking about. Some interesting comparisons here with butterfat. I mean, we have a lot of stuff we could pull out of this, but just to highlight here, this is quite positive because developing region demand has been quite strong.
It has, given the prices.
As prices have gone higher, we are seeing that tail off a bit now. But in the last year, we're up to about 16% year-on-year growth, and about 28% in the last 6 months. So it is pretty strong. We expect that will tail off in coming months. But into GDT then. So quite a weaker sentiment on the lead up to this event, and that's being borne out by big falls in futures prices in the Oceania region and also in European skim milk powder, and also called out the US cheese. Right, so but we do, you can see the arrows of there's only butter in the US, which has gone sideways. Everything else has been tumbling.
So the context is pretty negative.
Well, supply chains have probably got a bit of stock in them, and buyers sitting back saying they don't need to come forward now with a lot more activity in Europe because it's the middle of summer and everyone's not there. But also, there is a bit of a pullback to see as where this market goes. So the event certainly saw that weaker demand, particularly from the Chinese region, but in other regions as well, but much weaker demand across the board, worst in skim milk powder, and therefore the heaviest falls. Only tiny bits of green ink in that set of results. The demand story was all about, I guess, China not needing product yet, not needing to reload. Other regions did step up to take up some of the slack, but when you look at the starting position, there simply wasn't enough demand to get this show rolling. And it didn't persist, so we've seen heavy falls as a result. Similar in fats, it rolled on longer and probably kept prices better, certainly better than what was expected. by many, but you see that the demand was also weak in overall terms. The buying, China participated far less in whole milk powder than it had done in the previous event, so it's a real roller coaster developing there. It's still well below the prior year, and again, in terms of absolute volumes on the right-hand side, we're still well off, even though there's a lot less being made available through the platform. Asian buying of skim milk powder was encouraging.
Yeah.
That's well above the prior year, and it started the last few events well above that. So that is encouraging. That demand's fairly steady. And finishing on that, let's go back to China.
Yeah, well, it's China this week. But this is pretty interesting data, and you can see there that the whole milk powder stocks to use ratio is pretty much in line with last year. But what's interesting is that it's in completely different circumstances. So last year we had the reloading of a lot of those supply chains from imported product and very strong demand in China.
Yep.
And this year we've got the stocks to use at the same point because demand has tanked and Chinese internal stocks have built.
Yeah.
So those stocks are not going to be run down as quickly as they were last year, are they? Which kind of explains why China's not turning up.
Yeah, their milk cost is a lot lower in China as well, and they are discounting for milk going into non-fresh uses. That's possibly still going on. But there is a different set of circumstances, and that demand, that's what we buy this data, but it's saying that demand in the last few months is down 5%. That's not going to get better real quick, because we still have a great deal of uncertainty about the length of lockdowns and how severe they'll be as they're trying to get on top of COVID. We all know better than that. Skim milk powder, similar. It's a different situation. They don't produce anywhere near as much internally, but that stock is starting to run down. Demand is not as bad internally in using that ingredient, but you can see there's been a tremendous build earlier, which is starting to run down. So we are on the way to a recovery, but it's probably been pushed out a bit longer.
Yeah, you would have to say that, wouldn't you?
Yeah, so it's weakened the fundamentals, and I think in our next update of our outlook, that'll show through in how we see both powders and the impact of China on both powders. But wrap. Okay,
where we're at.
That's it from us. Thanks for watching. We'll be back sometime soon.